Alright guys, this is Cole with the Branford Exchange. We're getting back to work after the holidays. I hope you guys all had a Merry Christmas or whatever you were celebrating. Today I'm going to make a quick video about ETFs. I know that you guys see us if you follow us on our social medias, if you keep up with us on our Discord chat, you know that sometimes we call out a lot of ETFs and you know that we like to invest in ETFs. What ETFs are is they're derivatives. They're part of the derivative market, and what derivatives do is they track their value, or they derive their value rather, from an underlying asset or a group of underlying assets. And, they can track the prices of different things. They can make it a lot easier, faster, and cheaper to invest in different things, like for example commodities or precious metals or indexes or whole sectors of the economy. Whereas if you wanted to invest in, let's say, healthcare or something like that, normally you would have to go and pick out a bunch of healthcare stocks and invest in them. And instead, you could just go ahead and Google a list of, for example, I have a list already pulled up here on etfdb.com, etfdatabase.com, and this is just a list of ETFs that are broken up by sector. So you can see here, if you wanted to invest in the technology sector, you could buy QQQ, and that's an ETF that will track the technology sector. And if you wanted to invest in real estate, you could buy VNQ, and then you would have exposure to the real estate market. So instead of buying individual real estate stocks, you could just buy that ETF, and then you could have an exposure to that overall real estate market. But it's easy to gain exposure to things like precious metals too. For example, gold. JNUG is the bullish ETF for gold. So if you were in JNUG, this is deriving its value from the price of gold. But a lot of these ETFs have inverse ETFs, which is why these ETFs are so attractive to a lot of people, is because they always have an inverse. So for example, JNUG, if you were to look at JDST, for example, it would be doing just the opposite of what JNUG's doing, because the inverse of JNUG is JDST. So they are tracking each other inversely. So it's important, if you're going to be investing in ETFs, to look and see if they have an inverse. And it's always important to look, if they do have an inverse, to look at how the inverse is performing, and look at how the regular ETF is performing, to kind of get a better idea of which one you might want to buy into. I know that a lot of you might not understand what an ETF is or why it is that we like them. And again, it's just because it's a cheaper, faster way to gain exposure to an overall market. For example, an entire sector of the economy, or if it was an actual index, for example, you can't go out and buy a share of the S&P 500, but you could go buy, a share of a ETF that tracks the S&P 500. So that would be a good way to gain exposure to an index. Whereas, normally you can't just go out there and buy shares of an index. So that's why, these ETFs are really nice. But again, you do have to be careful with these ETFs because they are derivatives. Again, this is, why you want to be careful with them. A lot of times these ETFs are depreciating assets. So you can see here with JNUG, you can see over time it kind of gets closer and closer to zero. It's a declining or a depreciating asset. So that's one reason to, kind of be careful with these. These are not meant for long-term holds. These are meant to gain short-term exposure to an overall index or market or commodity. Again, these are not long-term holds. These are only short-term holds, but they're only meant for short-term holds. And a lot of the times on this channel, we're only making short-term positions. We're only holding stocks, for anywhere up to a week probably. We normally don't hold stock for over a week at the Branford Exchange. So again, this is why we like ETFs, because we like to take those short positions. If we were to go back here on the 180-day 4-hour, you can see these really nice volatile swings, but they're easy to track. These things, if you were to draw support and resistance lines, a lot of these ETFs are very easy to predict. So that's why we like them here at the Branford Exchange. Again, it's just a cheaper, faster, easier way to gain exposure to an overall market. And that's pretty much why we like them, but I just wanted to break it down for you guys. And I know that this leads right after we just made a video on the different sectors of the economy. So if you were wondering how to gain exposure to any of those sectors, these ETFs would be a great way to gain exposure to those sectors. And again, a lot of the time that these ETFs are only for short-term positions, which is what we would recommend them as, is for short-term positions. But at any rate, that's it. If you guys have any questions about this, please leave it in the comments below. Make sure you join our Discord. Again, we have more and more people joining that every single day. We give a lot of stock callouts in there. We have a lot of good discussions. We have different chats in here, but in the main chat, if we just go to the main chat, you can see, I'll scroll through. There's a lot of good discussions going on just about everything stock. So if you guys have any interest in that, if you want to be in a community of traders who have experience and who help each other become profitable traders, then I'm going to leave the link for this Discord down in the description. You guys will be able to join that. At any rate though, leave a like and share if this was helpful, and I'll see you guys in the next video.